What if I told you that a Nigerian company increased its earnings by almost 200% in just 1 year, grew its dividend again, expanded its asset base massively, and still has investors wondering whether the stock can go even higher? That company is Aradel Holdings. Today, we're going behind the numbers to find out whether Aradel's incredible 2025 performance is the beginning of a long-term growth story or whether investors should be worried about the risks hiding beneath the surface. And trust me, one number in this report shocked me. Welcome to Behind the Numbers. On this channel, we break down the financial statements of publicly listed companies in simple language so that everyday investors can understand what the numbers actually mean. No accounting degree required. Today, we're looking at Aradel Holdings, one of the fastest growing companies on the Nigerian exchange. By the end of this video, you'll know how much money Aradel made, whether the profits are real, how safe the dividend is, whether the stock looks expensive, and what investors should watch going forward. Let's start with the business itself. Aradel is an energy company. Its main business is producing and selling crude oil and natural gas. In simple terms, Aradel makes money when it extracts oil and gas from the ground and sells them. The company also owns interests in other energy businesses and has been expanding aggressively through acquisitions. One thing investors like about Aradel is that much of its revenue is earned in dollars. That can be a major advantage in an economy where the naira continues to face pressure. Overall, this is a business with valuable assets, exposure to the energy sector, and significant growth opportunities. Now let's talk about revenue. Revenue is simply the total money a company earns before expenses. Think of it as the company's sales. In 2023, Aradel generated about $221 billion in revenue. In 2024, revenue jumped to $581 billion. Then in 2025, revenue increased again to $699 billion. That's a growth rate of over 20% in just 1 year. What's even more impressive is that revenue has more than tripled in only 2 years. This tells us that the company is producing more, selling more, and extracting more value from its assets. So far, the story looks very strong. But revenue alone doesn't make investors rich. Profits do.
And this is where things get interesting. Profit after tax, often shortened to PAT, is the money left after all expenses and taxes have been paid. Aradel's profit after tax increased from about $259 billion in 2024 to over $757 billion in 2025. That's an increase of roughly 192%. Let that sink in for a moment. Revenue grew by about 20%, but profit grew by nearly 200%. Whenever a profit grows faster than revenue, investors should pay attention. Part of this came from acquisitions and increased contributions from associated businesses. Now let's look at another important number, EPS. EPS stands for earnings per share. This tells us how much profit belongs to each individual share. Aradel's earnings per share increased from 59.35 RON to 173.62 RON. That's almost triple. As shareholders, this is one of the most important numbers to watch because growing earnings per share often drives long-term share price growth. Now, before we get too excited, there's an important question we need to answer. Are these profits real? Because sometimes companies report huge profits, but very little cash. That's a warning sign. So let's check the cash flow. Cash flow shows the actual cash moving into and out of the business. Aradel generated operating cash flow of over $348 billion in 2025. That's higher than the previous year. In simple terms, the company is not just reporting profits on paper. It is generating real cash from its operations. That is exactly what investors want to see. The profits appear genuine and supported by strong cash generation. Now let's answer the question many investors care about most. Is the dividend safe? Aradel paid a total dividend of 33 RON per share. That includes an interim dividend of 10 RON and a final dividend of 23 RON. Now compare that to earnings of 173.62 RON per share. The company is paying out only about 19% of its earnings. This is known as the payout ratio. A payout ratio measures how much of a company's profits are distributed as dividends. At just 19%, Aradel has plenty of room to continue growing its dividend in the future. Based on the numbers, the dividend appears very safe. Now let's talk about the biggest concern in this report, debt. Aradel's borrowings increased from roughly $96 billion to more than $2 trillion. Yes, trillion. That sounds alarming, and honestly, it should. Investors should pay attention. However, there is an important context.
The company used much of this debt to acquire strategic assets and expand its business. At the same time, total assets increased dramatically, cash reserves increased, and shareholders' equity also increased. Equity, sometimes called shareholders' equity or net assets, is what remains after a company subtracts all its liabilities from its assets. In simple terms, it's the shareholders' portion of the business. So this doesn't look like a company borrowing money to survive. It looks like a company borrowing money to grow. Still, investors should monitor this closely because debt becomes much more dangerous if oil prices weaken significantly. And that brings us to a question I always ask whenever I analyze a company. Is management actually making shareholders richer? In Aradel's case, the answer appears to be yes. Earnings per share increased. Net asset value per share increased. Dividends increased. And there was no meaningful dilution. Dilution happens when a company issues new shares and reduces the ownership percentage of existing shareholders. Now let's talk about net asset value, often shortened to NAV. NAV is simply what each share would theoretically be worth if the company sold all its assets, paid off all its debts, and distributed the remaining value to shareholders. Think of it as the company's net worth on a per-share basis. Another impressive metric is ROE. ROE stands for return on equity. Return on equity measures how efficiently management uses shareholders' money to generate profits. The higher the ROE, the more profit the company is producing from the capital invested by shareholders. ROE's Aradel is above 50%. That's exceptionally strong. Now let's talk valuation. At a share price of around 1,750 Naira, Aradel trades at a P/E ratio, or PE ratio, of about 10 times earnings. The PE ratio tells us how much investors are paying for every Naira of earnings. For a company that grew earnings by nearly 200%, 10 times earnings does not look excessive. The stock does trade at a large premium to its book value. Book value is another name for net asset value. It represents the company's assets minus its liabilities. In simple terms, it tells us what shareholders theoretically own on paper. Aradel currently trades at about 5 times its net asset value. That sounds expensive. However, oil and gas companies are often valued more on their earnings power, cash generation, reserve quality, and future production growth than on book value alone. Based on current earnings, Aradel appears fairly valued, rather than obviously cheap or expensive. So what's the final verdict? Aradel delivered one of the strongest sets of results on the Nigerian exchange in 2025. Revenue increased. Profits exploded higher. Cash flow remained strong. Dividends grew. Shareholder value increased. And management continued expanding the business. The biggest risk remains the sharp increase in debt and the company's dependence on oil prices. But overall, Aradel appears to be one of the strongest shareholder value creators on the Nigerian exchange today. For that reason, my conclusion is simple. Accumulate. Especially for investors with a long-term investment horizon of 5 to 10 years. Before we wrap up, a quick disclaimer. This video is provided strictly for educational and informational purposes. Nothing in this video should be considered financial advice, investment advice, or a recommendation to buy, sell, or hold any stock. Every investor's financial situation is different. Always do your own research, and where appropriate, consult a qualified financial advisor before making investment decisions. My goal is simply to help you understand the numbers so that you can make more informed decisions for yourself. Now, I'd like to hear from you. Would you buy Aradel at 1,750 Naira per share? Let me know in the comments. And if you enjoyed this breakdown, subscribe to Behind the Numbers for simple, beginner-friendly analysis of Nigerian stocks, dividends, and financial statements. Because every number tells a story. And together, we'll learn how to read it. See you in the next video.